Alright, so I didn't know if I was going to have time to make a video today, but I did, or I will at this moment. So let's continue. Anyways, let's start with this. What were probably the two easiest trades of the day, in my opinion, or better yet, the two high probability trades are here and here. They're both of these measured moves. Reason being is, well, tight trading range. You can say, yeah, if you look at it in hindsight, the bear bars are good, and we had a double bottom with this higher low from the day before and this low, and then we had another double bottom here. But at some point, you have to ask, look at the bull, the stop entry for the bulls. It's not great, and you can tell these two bars tell you that the odds favored up. We're at support. We have a double bottom inside of a nested double bottom here. The nature of the sell-off was low probability because you had trapped traders. And, well, you can probably sell here, but I think I would much rather, I always will, I'd much rather just take on the extra risk and wait for the follow through. But once you get here and here, the odds are very high that you will at least get a measured move of these bodies. And one thing I like to do is this right here. So if you get a measured move, say of these bodies, and the measured move takes you to, you can see it takes you to 36.75 right here. Yeah, 36.75. What I'll normally do is set a target 2 ticks above that at, what is that, 37.25. So, excuse me, the target's 36.75, so 2 ticks above would be, sorry, it's been a long day. The target's 36.75, so 2 ticks above would be 37.25. And look what happened right here. Price went to 37. So when in doubt on targets, especially with measured moves, it's never a bad idea to just do 2 ticks above. Close is close enough. You're not exactly getting a measured move down, but the reality is you didn't have to risk. Look how much you had to risk if you sold this close. You had to risk from here. You had to risk like 3 ticks, so it's okay. What was the next? The next easiest trade was this right here. Look right here. We tried to bottom. We were trying to set up a base, and if you were in the room, you heard Al say, here's yesterday's low, this red line. There's a chance, maybe 50-50 chance at this point, the market may try to form an inside day and turn up. So thinking about it, looking to buy down here, betting on a test of say the open of the day, makes a lot of sense. The math is really, really good. However, when you do not get a stop entry, you get a bear breakout, the bulls cannot get a bull inside bar. It makes it difficult, and it makes it difficult because if it's a trading range, price may fall below obvious support. It's similar to falling below here and then turning up. Price may fall a few ticks below yesterday's low right here and turn up. So if I would do anything, I would buy and just say, buy above a bar, buy a bear close, and just put your stop, say 2 points below this low. And I would do that and just set a target, arbitrary, just put an arbitrary target at the open of the day and walk away for 30, 40 minutes. But then there becomes a problem. Let me go back to what I was saying. I'll go right back to that. But first, it doesn't matter. Here we have a break of you can call it a channel, you can call it a break lower high, maybe we're in a trading range. The odds are we'll get a second leg up. However, here's the issue. We haven't had a bull close above the moving average in 20 bars. Actually, since the whole day. We finally have a bull close above, so it could be, it is a 20 gap bar short. Well, in general, 50-50 chance we make a new low of the day, 50-50 chance we make a higher low and turn up. Well, what did this bar tell you? 1250 told traders that we are not going to get that measured move up. Excuse me, we're not going to make a higher low. Notice what happened with this bar. Notice this low is 41 even, this low is 40.75, this high is 40.75. There's a gap. Some traders who, it's actually, let me look at this, 41 even. Basically, it'd been hard. The bulls had to get out quick if they bought this low or any lows down here. This was mainly caused by bulls who bought this close. If we look at it this way, maybe you buy this close, you buy what, maybe 2 points lower, 1 point lower, and you can see right here this close is 42.25, this low is 40.25. Well, so let's just assume that price went one tick below here, so you bought here, you bought more here. This is your break-even point. This tells you a lot of scaling bulls gave up. So the only thing I would do here is buy. But you can wait. There's a small chance that you get a bar like this, and you get instead of this bar, you get a reversal bar. So if you wait for the follow through, you have a 60% chance of a measured move down. So again, find the target, open to close takes you to 27 even. Set your target at 27.50. Go for a walk. You've been filled. You had a couple targets. You had a possible double bottom. We broke below it, so it is a measured move. It's a failed breakout of it's a failed double bottom. It's the same thing. Same thing here. We had a double bottom. This is a double top. All double bottoms are, well, I don't want to go that far, but double top, neckline, basically a double top. It's a neckline. The market tried twice to, it tried here. It, in theory, think about it, it tried to bottom and failed, so you get a measured move down. So we had a measured move down to here. We had a leg 1, leg 2, if I'm drawing that correctly. Leg 1, pull back, leg 2, maybe. I don't think, yeah, we definitely get that. So anyways, just look at the bars. If you sell here, put your stop above and just wait. However, there was a warning about today. Look at the open of the day. The first 8 or 9 bars. We have doji, 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 trend bar, doji, 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 trend bar, maybe. It doesn't matter. A tight trading range is a tight trading range. It's a good example this week was here. Well, yeah, you can say, yeah, it's going higher. It probably is. Sure. But you have to think of one thing Al always says. High probability is not as high probability in a trading range, and lower probability is higher probability. What does that mean? Everything's more neutral. So in a trading range, you've got to be leery about buying too high, especially when there's not follow through. You're getting tails, you're getting a tail here. You just have to be careful. Today, sideways, we get a breakout, but look right here, bad follow through, breakout, bad follow through, sideways, breakout bar, bad follow through, bull bars, breakout, bad follow through. What's the key at every new low? Right here. There's one thing that's happening, and that is bulls are making money. It's just that simple. So, and just to give you an example of scaling bulls, which I actually forgot this. I'll tell you a mistake I made. I ended up buying. I think I bought during here. I bought after the bar triggered and ended up buying a pullback. And I debated whether or not to put my stop one tick below the day. And then I just thought, betting that there's a 50-50 chance maybe we fall below, maybe we don't. But then I thought, heck with it, it's trading range. I'll put my stop 2 points below, and I'll just set a measured move target basically 2 times my risk. So it's basically, I had a target around the open of the day. Anyways, once we got up to here, I should have taken profits below this bar or above this bar on one of these closes. I did not, and actually ended up getting out at break even on the entire trade on this bar, which, wasn't great management. But at that point, I was clearly wrong. And when you're wrong, you're wrong. You just move on. The best advice I've learned from trading is you make a mistake and you move on with it. Because if you try to make it back, you're gonna hurt yourself. As Al said, if you heard him today, he talked about hitting a bunch of singles. Not, in other words, sell this close, put a measured move down here, walk away. Sell this close, measured move down, walk away. Don't worry about perfecting everything. Worry about doing the right thing. Anyways, let's say you bought this low. You said, trading range day, I'm going to buy this low, and I'm going to buy more on a stop entry. Well, let's walk through that real quick. So let's say I bought this low. I bought the low of 45.50, and I'm going to look to buy more lower. Well, am I going to buy above here when there's probably going to be a second leg down? Of course not. Am I going to buy here? Well, probably not. And the reason being is we're probably going to get a measured move down. So I don't want to buy here when I think the market may get all the way down here. So here, not quite there. Here we touched the target, came within a tick, turning up. Okay, maybe I'll buy above that bar. And let's say you did. Well, look what happened. This is your average entry price of your 2 trades. Trying to see here actually. And you can see traders who bought, some traders will just buy down here and get out break even. But anyways, you don't have to know that. You can look at the rally itself and tell. Bulls aren't getting great signal bars. Here's your entry bar after the signal bar. You get a breakout closed in the middle. You get a doji, another breakout. But broke out above this high. Will bears make money? That's the exact same. That's the one thing I heard Al say. Will bears make money? And they did. So, there's warnings. This whole day was a trading range. So, when we fall below the low of yesterday, here, one thing I'm thinking in the back of my mind is, yeah, we may fall low, but we're probably going to get back to this area because it's trading range. So, if you notice, if a trader bought down here at the measured move target betting price, we get back to here, they would just about win. Notice this close is 43 even, this close is 43 even. This close is 33.50. We clearly went to 33.50. Here, this is a decent signal, and here's why. Late in the day, consecutive, we've had sell climax. Sell climax is another sell climax, another sell climax. We've got a measured move. You have a measuring gap this high to this little breakout down to here. You've got numerous reasons. You're at the December 31st close. You're getting sell the close bars, and then you're getting a doji, so possible warning. We rallied for 4 bars pretty strong, so probably buyers at a new low. Well, look what happened. The bulls are clearly making money. So you can see, here, price. We'll see something real quick. That's interesting. This happens a lot. So, I see this. So let me walk through it. You buy above this bar, put your stop 1 tick below. Price stops you out to the tick and turns your way. That happened Thursday. I hope I can find it. I think it was Friday. No? It's a good example of a small doji. I can't remember. Maybe it was. I'm not going to be able to find it. Apologize. Anyways, the whole point behind it was small risk. When you have a really small bar, this bar is not really small, but it's, the smaller the bar, the the lower the probability. So sometimes you need to remember and think about the fact that price may easily go 1 or 2 ticks below and stop you out. So think about it. I'm going to buy up here for my stop down here. What do I do here? Don't get trapped out of a good position. And the truth is, if you, I guess here's what I'm getting at. I probably would not, if I was going to buy above and not, I would either do this. I would trade smaller, maybe half size, buy above, put my stop 1 tick below, and then trade a full position on the next entry because I get stopped out. Or I would buy above, put my stop maybe a point below, just in case, because of this exact reason here. And you can see a lot of traders, for one, I don't think this is because bulls were trapped out. I think it was because, for one, buy the closed bulls, clearly disappointed. Bears, sell the closed bears. They sell here, stop up here, disappointed. They look to get out of break even, which they did. This bar is give up bar. However, trading range day, strong breakout. We got a breakout above this high, so you have to be expecting, 2 things. We may get this, if I can draw it right. I don't know why TradeStation does that sometimes. Great platform, but it kind of messes up at times. That and this. So you have to be thinking about a possible measure move of a double top, and measure move up based on the breakout follow through, especially a retest of yesterday's low because of buy the close. You have scaling bulls. However, this huge warning. So what happened here? Think about it. I'm kind of all over the place, but what's the one thing you notice about this high, 1340 high, this breakout, and this bar? That is this. Bears not only made a 1-point scalp if they sold 32.50 during this bar, they made a 2-point scalp. Seems kind of, it may not seem important, but you have to understand that's very disappointing for bulls. And disappointment means traders will scalp. If traders are scalping, they're not swinging. If bears are making money above bars, they're going to make money up here, they're going to make money up here, they're going to make it the whole way. So that's what creates channels. So we may not reach the top of this. Second off, sure we had a 50% pullback somewhere. Overall, I kind of like today. I guess I liked it because, well, for one, price was moving, but second, I really like when you have. I'm starting to like them more when you get such a sideways possible final flag in the move. I doubt we got something like that. Nah. Buying pressure. So if we get a breakout, it may be limited. We may retest up here. I actually, to be honest, I mismanaged this too. I actually bought. I think I bought this close. And now it's fairly confident price we get up to here at minimum. And if you remember, this bar turned up and was turning down on its low with about 4 minutes into the bar. And I was kind of thinking late in the day, I'm just going to get out of break even and exit the trade. And of course, 20 seconds later, closed on its high. But I guess what I'm saying is the math is just excellent to buy here, stop somewhere down here, and betting on that we get back to this level. It's just really, really good. It's the same thing with buying in here, betting price gets back to here. You've got to do something here, but it works. Second off, my favorite trade is breakouts with follow through. It's just easy to me. It just makes sense. Tight trading range the day before. Breakout follow through. Tail, so you have to be concerned, but strong enough breakout, we're going higher. Buy at the market, put your stop down here, maybe even down here. You can take some off here, or you can say, yeah, it's going up. It's probably going higher. Strong enough breakout, minimum stop down here, probably another second leg. Strong enough breakout, minimum stop, probably down here. And even if you didn't exit here, you can still hold and then get out here. Maybe I'd get out here. It's bed day. Strong enough breakout, buy this, and you can hold. It's always interesting. But overall, on a day like today, what was the most important characteristic on a day like today? I think it was this. This right there told you all the information you needed to know today. Told you a lot of it. Told you, yes, it is. Clearly, it was a trend day, but look at the signal bar falling below a bull bar like that. A lot of trading range behavior. So, overall, you can't be disappointed on a day like today. If you look at it, as we were going down, bulls were making money, and bulls were making money below bars. Bears were making money selling above bars. They're making money selling through here. It's trading range. It's simple as that. If I pull up this chart, kind of makes it look a little better. Strong breakout, but bad follow through. We're starting to go sideways, and of course, came back to the breakout point. Strong breakout, but we closed the gap. So that's really all I've got. That's about all I have to say. So, hope everyone enjoys their evening.